Just Delos Santos. It's the start of a new trading day and a new trading week. But first, let's go straight to our top story. The Philippines and 14 other economies in Asia Pacific signed the world's largest free trade deal, encompassing nearly a third of the global population and gross domestic product. Top officials from 15 countries, including China, South Korea, Japan, and Australia, inked the Regional Comprehensive Economic Partnership, or RCEP, on the last day of the 37th ASEAN Summit, hosted virtually by Vietnam. This is the first time that China, Japan, and South Korea are all in a single trade pact. Trade Secretary Ramon Lopez said the RCEP will further broaden the country's engagements with its trading partners through integrated regional supply chains, improved trade and investment, and enhanced transparency. Some benefits include tariff elimination of at least 92% on traded goods, as well as stronger provisions to address non-tariff measures. The deal is also seen as a way to jumpstart trade as Asian countries continue to reel from the US-China trade war and the pandemic. The deal covers 2.2 billion people with a combined GDP of over $26 trillion. Talks on the China-backed trade pact began in 2012, and ASEAN leaders say the completion of negotiations is a strong message, affirming the bloc's role in supporting the multilateral trade system. The Trade Department says the RCEP is expected to enhance market access for key Philippine products, such as garments, automotive parts, and agricultural products. RCBC Chief Economist Mike Ricafort says the RCEP will help faster recovery of the global economy from the COVID-19 pandemic. But Trade Justice Pilipinas, a campaign for equitable trade, says the deal does not give enough flexibility for ASEAN states, saying it could lead to a widening gap between the richer and poorer economies. The agreement will be implemented after a ratification process, which could take up to 2 years. India had backed out of RCEP talks last year, but ASEAN leaders are still open to New Delhi's participation. Meanwhile, the US is not a part of the trade pact. All right, and after that big news, how is that trade deal moving regional stocks at the open?
Okay, Jess, well, I can't really say if it's exactly this trade deal that is moving regional stocks. As you know, there's so many moving parts, but it does appear that at the open, we do seem to see some flickers of green all around. You can see the Nikkei 225 up by 1.6%. Japan, that's the Japanese markets, but you've got the Hang Seng and Shanghai still close as per my terminal right now. But you can see Taiwan up by more than 1%, South Korea as well up by 1.5%. So quite a lot of optimism here. Singapore as well, that's up by 1.2%. Now, as you already mentioned, this comes after nearly a decade worth of negotiations. It's quite a big deal here. And this, according to Vietnamese Prime Minister Nguyen Xuan, this is a strong message, especially during this pandemic. So a lot are looking at how this would affect the supply chains that have been disrupted due to the pandemic and just a general support of the economic recovery. Recall that this covers 2.2 billion people. And this not just, strengthens the trade, but also just, codifying new e-commerce rules. So a lot of very pandemic related stuff. Now, this comes also amid China, which is slated to report its October industrial production today. They are analysts, at least according to Bloomberg, are saying that the October activity data over in China will probably show that the economy made further progress. So it is a positive outlook for China today. Global stocks, meanwhile, have actually recovered right now to pre-pandemic highs. That's, of course, after last week where we saw all of this optimism on the vaccine. And also just the defensive industries now underperforming and moving into the cyclical sectors, the ones that were very, very oversold during the pandemic. But of course, still a lot of concerns when you talk about the number of cases flaring up and also the lockdowns that are going on over in Europe. Now, let's take a quick peek at how we are opening. This is 6 minutes into trade here. A lot of analysts are seeing that this run up that we've seen, and you can see that on my chart here, how we have performed in just the past couple of weeks. This was 2 straight weeks of a rally, and a lot are expecting a pullback here, but we don't seem to be seeing that at the open. We're still up by 0.2%, very, very close to that 7,000 level that everyone is, hoping for. This comes after we were down on Friday by 0.8% for the last trading day, but still on a weekly basis, last week we were up by 4.3%. And as I mentioned, this is what 2Trade Asia was saying: positive headlines on the vaccine front. But then finally we took a breather on Friday. But the good news is that a lot of trades happening. The turnover last week soared to 75%, around 15 billion pesos of trades per day. So that's quite, a good showing. Especially since we've seen very tepid trades, and also overseas investors started buying in. So we did have net flows of close to 800 million pesos per day last week. But again, Phil Stocks is saying, don't be so excited yet. We might be hitting a roadblock this year, especially since we were up by more than 10% in the past 2 weeks. And of course, a lot of eyes this week. There's going to be September 2020 remittance data, and also the BSP's policy decision this week. I just want to take a quick peek at which sectors are moving, the markets, and whether that's a broad-based recovery. Everyone, save for properties, seem to be pulling up the index. You're going to be seeing the industrials performing best, but as I mentioned, properties still down by more than 1%.
All right, Dan, you mentioned the BSP policy decision. We're going to talk about that more later on in the show. But for now, you've got one conglomerate seeing a lot of movement in Friday's trade on the back of their earnings. What's happening to LTG?
Okay, let's take a step back, because this is a very interesting conglo to be watching out for, because they're in such a diversified mix. They're in tobacco, they're in banking, but also, other Lusiatan investments include PAL as well. Now, you can take a look at your screens here. The third quarter net income was actually up by 11% year on year to more than 6 billion pesos, even as the revenue actually declined by 2.8% year on year. And you can see in your screens how the pie of the contribution comes for PNB. You've got, for LTG rather, PNB actually contributed 14% to the earnings, but tobacco 75% of that mix. That's very interesting to note here. The tobacco surging in terms of the income contribution. Now, just a quick peek at PNB. Now, what happened to PNB? They've actually reported higher third quarter profit. Even as the provisions, and that's as the provisions fell quarter on quarter. So you can see their third quarter net income was actually up by 3.7% to 2.5 billion pesos. And that's on the back of the whole 9 months having to set aside 9 billion pesos for those, possible loan losses. That's 6 times higher than they set aside last year. Now, that brought their net income for the 9 months down by 39% because of these provisions. But if you take a look at their operating profit, so this is the profit. Imagine if they hadn't set aside these provisions, diba? It would have actually been up by 42% year on year to 14.1 billion pesos. So that's actually what investors had been watching out for. PNB had also rallied already on Friday, and this according to their president, Vic Veloso. Their performance in the third quarter continuing to show improvements in the core income. I just wanted to take a quick peek at PAL this morning as well. Because they had also reported, together with the LTG group, their earnings here, and that is not a very pretty picture. They had reported net loss of 7.92 billion pesos in the third quarter. That is wider than the loss that they had seen last year, 5.16 billion pesos. So this is a company that was already struggling with losses. Plus, with the pandemic, these are even widening. Get this, their 9-month net loss, Jess, is close to 29 billion pesos na nawala. So, PAL here trading down by 0.7% at 7 pesos and 10 centavos. Meanwhile, just one thing that we were mentioning, that everyone will be keeping an eye on is the BSP. Will they cut, or will they hold? What are the analysts saying, Jess?
Well, if you are going to believe at least a majority of the analysts that BusinessWorld was able to survey, it would show that 11 out of 16 actually say that they are expecting the monetary board to leave the rates untouched on Thursday here. They're attributing it primarily to excess liquidity. At the same time, an expected pickup in state spending. Just to contextualize things here, the BSP, of course, so far has slashed rates by 175 basis points, putting over overnight reverse repurchase at 2.25%, and then lending at 2.75%, and deposit facilities at 1.75%. Recall as well that BSP Governor Ben Jokno vowed before, that they are going to carefully assess the timing of rollback of aggressive policy measures to actually avoid serious repercussions or impact to the economy. And this primarily is one of the reasons why BPI's June is expecting the Monetary Board to actually maintain rates here. According to him, the BSP may actually consider the difficulty of unwinding excessive monetary easing once the recovery starts. At the same time, he's saying that the BSP might actually be on a wait and see mode this time, really looking forward to the Congress to actually pass measures to stimulate the economy, including a bigger and better targeted 2021 budget. By better targeted, he's saying, allocations should be made for infrastructure spending, at the same time for health issues as well. Now, Maybank's Suhaimi Bin Ilyas is saying that the Philippines is actually off the worst after the third quarter GDP showed smaller economic contraction. That's why he's expecting as well, that the Monetary Board would actually be extending its prudent pause here, especially as we'll get to see more improvement when it comes to quarantine measures being eased as well. On the other hand, you have Union Bank's Carlo Asuncion, making it a factor, that the slow bank lending growth should actually be something that the BSP should look into as they make a decision. Of course, lending growth has only grown 2.8% in September. That is the slowest rate that we've seen since 2004. And according to him, further cuts may actually not result in desired gains here. And at the same time, Asuncion is saying excess liquidity is also a factor as market investors look for more asset earnings. Now, at the same time, 11 out of 16 saying there's going to be a pause. How about the other 5? Well, they are saying, particularly Yuben Paracuelas of Nomura Holdings, he is in fact expecting a 50 bip cut up to the fourth quarter here to 1.75%. He is expecting a 25 bip cut come the policy meeting on Thursday, and then another 25 bp cut as well on the first quarter of 2021. That's due, very much due as well to much weaker pace of recovery, according to Paracuelas here. And these measures, according to him, will actually make up for the weak fiscal spending here. Now, Capital Economics Alex Song at the same time is flagging inflationary risk, saying it's still on the downside. That's why another 25 bp cut. The same thing with Vic Abola of UANP. He's saying, the positive rates won't be important as a lot of countries are actually experiencing the same thing. So, kumbaga, we're not alone in this front. And according to him as well, what's the use of higher interest rates when vast majority of Filipinos are actually suffering and dipping into their savings, if any?
Okay, Jess, so a lot still expecting a prudent pause, but just to recall that the BSP has also done preemptive surprise cuts in the past, so we really don't know what's going to be happening. We're going to be waiting on that decision on the 19th.
Surprise na lang Thursday.
Exactly. We'll see. Meanwhile, you've actually got a lot of economists and analysts also possibly revising their GDP forecast after the third quarter print. What are they saying now?
They are saying it's highly likely, Dan. For one, you have Moody's Christian de Guzman. I mean, after that negative 11.5% GDP, he's saying that, that growth in the third quarter actually reinforces downside risk to their current forecast. All things considered, the quarter-on-quarter rebound, according to him, was one of the highest in the region. But the year-on-year contraction highlights the effects, the negative impact of the enhanced community quarantine that was implemented at the onset of the pandemic. According to him, that the recovery is going to hinge highly on the ability of the government to actually contain the spread of COVID-19 without a need for a strict lockdown. Now, on the other hand, you have Fitch Ratings Sigarika Chandra, who's saying that as it exists, their GDP outlook for the country is at negative 8% for 2020, and Fitch Rating is saying there might actually be a modest downside risk to that after weaker than expected GDP output for the third quarter. At the same time, of course, you have a downward revised GDP figure for the second quarter as well. They are still expecting, however, recovery in 2021, but there are a number of factors that they want to keep an eye on. That includes the government's fiscal consolidation plans, midterm policy framework, and post-crisis. They are saying all that's going to factor into how they are going to determine the rating outlook for the country. That has so far been downgraded to stable from positive with a triple B rating here. Now, for AMRO, you have Ziwen Zhao saying that they are likely to revise their GDP forecast downward. Existing forecast is at negative 7.6% for 2020, but they are expecting a 6.6% recovery in 2021. A number of factors as well. That includes COVID policies, at the same time, economic conditions and government's fiscal stimulus for households and for businesses as well.
Okay, just well, recall that the government's previous forecast or standing forecast is negative 5.5 to negative 6.5% contraction, but we're still waiting on the DBCC and whether they will be revising those. Now, we will give you more of the news when Business World Live returns. Stay with us.
And you're still watching Business World Live. I'm Jess Delos Santos. The death toll from the onslaught of Typhoon Ulysses has risen to 69, with over 1.7 million people directly affected by its wrath. The NDRRMC reports that Region 2, Oregon Valley, recorded the highest of fatalities in Luzon. 24 deaths were reported in the region, 14 of which were due to landslides. 7 fatalities were reported due to flooding, and another 3 from electrocution. Now, while the rest of the country has already taken steps towards recovery, Cagayan is still experiencing massive flooding. For the region alone, about 342,000 persons, or 100,000 families, were affected by floods. Rice fields and roads alike remain submerged in impassable waters. The flood still has not subsided in 26 out of the province's 29 towns and cities. Both President Rodrigo Duterte and Vice President Leni Robredo have visited the region to check the situation. Robredo has been leading rescue and relief efforts in Cagayan in the past days. Meanwhile, the president has ordered the DILG to stop quarrying in the area. He says quarrying and the effects of climate change are to blame in the tragedy that struck. Now, the House of Representatives will resume session today after a month-long break to tackle priority bills and the ratification of the 4.5 trillion peso 2021 national budget. The lower chamber also started relief efforts for areas affected by Typhoon Ulysses. House leaders said the chamber has a full plate of priority bills scheduled for plenary approval and committee deliberations. Majority Floor Leader Martin Romualdez said they are also considering working on a bill that would extend the validity of the Bayanihan 2 bill to complete the release of the Pandemic Response Fund even beyond 2020. House leaders also pressed the Senate to pass the bill, creating a Department of Disaster Resilience after the series of devastating typhoons that hit the country recently. House Deputy Majority Leader Bernadette Herrera allayed concerns of senators on the funding needed for such department, considering the economic hit the country has already taken from the pandemic. She said the proposed disaster response department will be initially funded by the unexpended appropriation of all agencies absorbed or transferred into the department.
Tax collection share in the GDP fell in the 9 months to September. That's due to the weakening economy as a result of the pandemic. The Finance Department said tax efforts fell 14.5% year on year as of the end of September. That's as collections in the Bureau of Internal Revenue and the Bureau of Customs declined. Taxes collected by the government dropped 11% to 2 trillion pesos amid weak consumer spending and business closures. However, government's overall revenue effort rose slightly due to an increase by 21% in non-tax sources to 288 billion pesos. Expenditures were also up 15% year on year to 3 trillion pesos as pandemic expenses mounted. The Department of Finance said the country should continue to adopt fiscal reforms, particularly tax reforms, still pending in Congress, that's to sustain fiscal gains. Pending tax packages in Congress include the CREATE bill, which seeks to lower corporate income tax to 25% this year and overhaul tax incentives. All eyes are awaiting on whether the index will see a pullback this week, but with a newly inked trade pact hoping to boost the regional economy is hope on the horizon. We have with us First Metro Securities' Royce Aguilar to share his insights. Good morning, Royce. Welcome back.
Hello, good morning, everyone.
Royce, let's just kick off by opening the terminal together. So at the open, we were actually still in the green, coming off of some, sell off, not necessarily sell off, but some profit taking on Friday. But nevertheless, what are you seeing this week? It's been a pretty mixed picture here. You've got all the vaccine hopes, you've got now the RCEP hopes, but then you've got the typhoon also hitting us unexpectedly, and also a pullback that most had already expected even ahead of the typhoon. What are you seeing this week?
Well, for this week, to be honest, we were expecting the market will take a bit of a breather. Nevertheless, if the market pulls back, if the market continues to go up, one thing that is clear for us and what we are telling our clients is that that you buy the market on dips already, especially the cyclical names, meaning those were the previous laggards when the pandemic hit, and those are the same names that we are expecting to outperform as the country further reopens and once the vaccine comes in. So
Royce, can you say that this run up, this 10% rally that we saw in the past 2 weeks, is something that has fundamental legs because of the fact that the third quarter earnings came in better than expected, or is that everyone was sold off and really undervalued when actually this is the fundamental level, or is this really just optimism on that vaccine issue?
well, it's mostly on the optimism of the vaccine issue. It's pretty evident that for so long in the middle of this year, the market really wanted to go up, but of course, it was still finding catalysts to do so. And two things, right? The economy gradually reopening, and then number two, the vaccine. So those are your key catalysts ever since the pandemic struck. So it's slowly happening right now. That's why the market's going up. Of course, if you take a look at the valuation, it's still relatively. You may think it's relatively expensive if you take a look at the PE ratio, but since the economy is reopening, you will see the numbers come in later. But the prospects are getting clear right now. That's why the market is going up. So
Royce, if you take a look at this chart I have on the terminal, we've actually broken through the three moving day averages here. Is this that? What is your support level that you're seeing now? Are we ever going, or is there a clear support level now that we're not going to be going below 6,000 levels again?
well, for us, it was the support level right now is the June high. I think that's 6583. But of course, in terms of intermediate or short term support levels right now, it's currently at 67 and the like. So we're looking. Should the market go above 7180, those are your gaps in the early part of the year. So basically, in terms of technical analysis, it's getting really bullish right now, especially when the market went above the 200-day moving average, which prior
Okay.
to the breakout has been trading below it since November 2019. So technically, that's your long-term bullish signal that it's really a good time to get into the market. So you have this prospect in the fundamental side, you have support on the technical side. So that's why we are telling clients to buy the dips already, especially
By
on
the
the
dips.
cyclical names. Yeah.
And when you talk about cyclical names, which ones are you looking at? Are you seeing, exactly that, a rotation from the top players that we've been seeing towards the undersold ones? Or are you still cautious about, for example, airline stocks, casino stocks, tourism-related stocks? Or is now the time to be picking up these stocks and taking profits from, the tech stocks or the pure golds?
Well, for us, specifically the cyclical names that we are looking into are the ones that in the index that are in the index, mainly
Okay.
because those are your first um, liners that will benefit from net foreign buying, which we are currently seeing right now. So to be specific, the property, the holding names, and some financial names in the index. So those are your expected outperformers moving forward. So in terms of the airlines, it's another story. Of course, sentiment-wise, it helps them, but at the end of the day, now you're going back to will there be demand and the like. So there, because at the end of the day, on the other hand, your cyclical names under the property holdings, those are your somewhat normal activities prior to the pandemic. And you go, for example, you go to the malls, sometimes you buy properties, some more transactions in the banks. Those are normal activities that were somewhat temporarily withheld given the pandemic. But once the economy opens up, those are your first line of activities that you will resume. Of course, travel is another thing. Some people are still worried. But for example, on the construction side, you expect more construction already, so that will benefit, for example, the likes of Megawide outside of the index. So there.
Can you comment on how that relates with the third quarter earnings? Which ones were you most surprised about, on the upside, and which ones were you most disappointed about? It could be sectors, could be specific stocks.
Okay, well, to be honest, um, most we were just expecting a better quarter-on-quarter recovery. What shocked us was there were some companies that were already better year on year. So it's actually mixed. Some part of the holding, some part of the property sector, and even the financial. Bottom line, of course, year on year, expected it's still lower, but in terms of trend, slowly that's what we want to see. So moving into fourth quarter, of course, you have the holidays, you have the further reopening in the economy, in the malls, in the hotels. So we expect that to further improve quarter and quarter. So what we want to see, of course, okay, third quarter improve quarter and quarter already. We want to see another quarter and quarter improvement in the fourth quarter. So of course, moving to 2021, that's where you really want to see a year-on-year improvement already. So for now, we're just expecting a gradual recovery, and in terms of trend, we like what we see. So.
And final question, Royce, before I let you go, what are you pricing in terms of the BSP's rate decision on Thursday? Do markets really hope for an even deeper cut, or is that not really going to be moving the needle here?
Uh, well, at the end of the day, we have confidence on what the central bank will do. Of course, especially when the GDP numbers came in, the lower than expected numbers came in. Some economists or analysts are now expecting that the BSP may cut rates. Um, but right now, of course, what we are actually we are looking forward more into is the RRR cuts. Um,
Okay.
that's actually, I believe, more expected compared to the rate cuts. But of course, not necessarily this week, but as the year ends. But moving forward, but the BSP is there to accommodate more monetary policy, and that's what the market wants. So whatever they will do, especially what we want to watch now is the language that you will say on Thursday. Will there be no rate cuts, but will there be RR cuts moving forward? Bottom line, more accommodating monetary policy, so that will benefit or that will support the market.
Okay. So not necessarily a rate cut, but some accommodative stance would be beneficial to the markets. Thank you so much. It's Royce Aguilar of First Metro Securities. And that's a first look into the business day. Today is Monday, November 16. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos at ngayong taon marami tayong hinarap na hamon pero kayang-kaya basta tayo'y magtulong-tulong. Tuloy-tuloy tayo, tuloy-tuloy pa rin ang Pasko.
Anumang hamon ng mundo, magkasama tayo, itutuloy ang Pasko. Wala nang regalo, ang hiling ko, sana'y laging masaya tayo. Nandito ganito tayong dumaramay, handang tumulong at magbigay upang umutik sumaya ating buhay. Nandyan at abot kamay, tayo'y maging liwanag ng Pasko. Tulong-tulong tayo, tayo'y liwanag, ikaw at ako, tuloy pa rin ang Pasko. Tayo'y maging liwanag ng Pasko. Tulong-tulong tayo, tayo'y liwanag, ikaw at ako, tuloy pa rin ang Pasko.
Kapit sa pag